Welcome to this Standard Life Investments debate on the global emerging markets. Our debate will be split into 4 sections. This first one, will explore the 4 myths surrounding global emerging markets. Jeremy, I wonder if I could start with you. Draw some broad brushstrokes across the emerging markets. I mean, we've just seen a report saying that the growth isn't quite as much as it has been, as a slowdown. Is this the beginning of the new normal, do you think, as far as emerging markets are concerned?
Yes. I think investors have to be prepared for the next 5 years to be more challenging than, say, the years before the financial crisis were. A number of the things that had been tailwinds for growth before the crisis, rising commodity prices, exceptionally strong growth in China, the widening US current account deficit, these things are sort of not radically, but they're shifting into reverse. Also, a number of emerging markets haven't undertaken many structural reforms in recent years. Global trade and globalization is slowing down. So the way that we're thinking about it is that the emerging markets as a whole will still converge on the living standards of the developed economies.
Let's get a Barclays view about this. I mean, he was talking about the sort of economic structures of some of these emerging economies. What about corporate governance? Is that a worry for you?
Well, it is in some countries, particularly those countries where a number of stocks are really state-owned enterprises, where there is a high level of intervention from the states. I think some countries have made a lot of progress in that sense. And here again, like in many other cases, emerging markets is a very diverse group of countries and group of stocks. In countries like Mexico, for example, corporate governance is really pretty advanced, whereas in other countries like, particularly China, India, and other less developed countries, is certainly an issue and a concern. But there is progress in the way.
I mean, a lot of these developing countries and emerging markets make low-cost goods, don't they? They don't have this sort of value-added thing. Well, is that? I mean, that's probably an unjust criticism of a lot of them, but that's something that you clearly must look at?
So yeah, that's an interesting thought, and clearly there are companies that we invest in that we think are exciting opportunities that do play to that low-cost production. So, for example, Mint, it's an auto parts supplier in China.
Sure.
We think the quality of the stuff they're producing, it's world-class quality. Pricing is, let's say, 15-20% lower, and they're gaining business with BMW and so forth. Sure. As a result of that. So there certainly are those kind of stories, but we think there are interesting ways in which some of the emerging countries are actually going to be leaders in the future. So if you take the example of nuclear, so we're now moving into the 3rd generation of nuclear technology. The first 3rd generation nuclear reactor that's going to be built is going to be built in China. 80% of the nuclear reactors that are going to be built over the next 10 years are going to be built in China. Now, this is technology that comes from Westinghouse that the Chinese have bought, but the people who are going to have the expertise of actually installing it and operating it, China is going to be the world leader in that. Yeah. So these create some very interesting investment opportunities.
Which are the stable emerging markets that you think are worthy?
Well, one way to think about it, last year during the taper tantrum, there was this sort of talk about the so-called fragile 5 countries in emerging markets. Yes. Yeah. But actually, if you go underneath the surface, there was more to apart from the fact that at the time each shared a fairly wide current account deficit, there was actually more to differentiate them than they sort of had in common. For example, so those countries were, Brazil, India, Turkey, Indonesia, South Africa. But South Africa and Brazil, for example, are very large commodity exporters. India and Turkey are commodity importers. One country, India, we're much more confident in the structural reform agenda going forward, whereas a country like Brazil, we think that there are sort of a lot more a lot more imbalances and less impetus for reform going forward, and sort of makes us feel a little bit more nervous.
Right.
So I think I think we've sort of seen that theme is you can't talk about emerging markets as an amorphous whole.
Absolutely.
That there's as many things to distinguish them as they have in common. And so what you want to be doing is looking at countries which are doing things right.
Can we talk about the sort of headwinds that are taking place at the moment? And just Andy, let's turn to you if we may. I mean, it seems to me some really fundamental things are changing in the world away from emerging markets. What is the impact of that on the emerging markets, if I can sort of turn it around?
Well, I'm
bit of a broad question for you.
Thank you. Yeah, I'm very struck at the moment when you talk to any economist or listen to people talking that no one seems to be very certain about anything, and that uncertainty may create opportunity. It may not, but certainly in terms of emerging markets, I think the view is that if you think positively about the next 10 years, the opportunity in emerging markets is going to be greater than the rest of the world. That, I think, is a certainty. I think you can only invest into emerging markets, as that's the topic today, for a longer-term view. You have no idea what's coming next week, let alone in a year's time.
I mean, what about demographics? That's the next obvious thing, isn't it, away from the oil price? I mean, that's why emerging markets are so popular, aren't they?
In terms of the way people think of the long-term opportunities, then yes, I mean, the demographic profile of India is obviously entirely different from Japan. In terms of where we can add value at Standard Life Investments, it's very focused on the individual companies. So it's unlikely we'd take a broad theme such as demographics and try to play that because it's well understood by the market. So where we think we can add value is by really getting in detail with companies, looking for strong bottom-up focus on change ideas which are non-consensus. So it's that really which is our passion in emerging markets. There's more change taking place around the world. So when myself and Mark are putting together our emerging market equity portfolio, is really driven by change and uncertainty and the potential for us to take non-consensus insights and express them as investment views.
OK, let's question from the audience. Anybody got a point we'd like to make? We've covered quite a wide selection of subject matter. Yes, sir.
Question for the panellists. Although you mentioned standard of living as a benchmark for emerging markets, population's still a problem in countries like India's been used as an extensive example, but across much of Asian emerging markets, overpopulation is an issue. How can that gap diminish if the population is still growing at such a fast rate?
So just from a macro perspective, the key is productivity growth, right? So demographics are one driver of economy's potential growth rate because that drives the labour supply, the aggregate labour supply of that country. But actually long-term growth in living standards is entirely due to long-term productivity growth. And so this is where innovation, structural reforms, these sorts of things that improve incentives within an economy, the green revolution, a few decades ago was really important in that regard. And so just because a population's growing quickly, it doesn't have to that doesn't have to be a constraint on growth in living standards. I think it's only an issue if it sort of crowds out certain types of activity. But as I say, from a long-term perspective, those countries that are converging more quickly, their population growth rate is not a really important determinant of that change in living standards. It's sort of really how they're using those labour resources, how they're combining that with capital and sort of improving the way they do business.
If you look at the dangers in the world, they're all out there to be seen. And I think from a fund manager's perspective, anything like these points that you raised, they can see them, they know they're there. But that doesn't stop great opportunities from an investment viewpoint. There's going to be the opportunities there. It's for these clever people to find those gaps.
Right, gentlemen, thank you very much indeed for exploring the 4 myths surrounding the global emerging markets. For the moment, that's it. See you next time.